You might have targets that you need to make this much this day or this much this month, but you don't decide that. Market decides how much you take home at the end of the day or at the end of the month. Similarly, you cannot let the market decide your loss. When it comes to loss, you have to decide how much is the maximum you are going to lose every trade, every single day. We have often heard people advise against the same mistakes like averaging, holding a position for too long, not placing stop losses. These are some fundamental things which is absolutely required to be successful. It's all about risk management and capital management. Profits will come. You should enter each trade with a prefixed stop loss and a target in your mind. Whether you place a bracket order, stop loss order, cover order, or you use your mental discipline and mental toughness to exit at the level fixed in your mind is left to you. But without a stop loss and without a target in mind, you cannot be a successful scalper. If you enter a trade wanting 5K, you have to exit the moment you see 5K. If 2000 is the stop loss you have fixed in your mind, you have to exit no matter what. Okay, when a stock is moving up, there can be scope for a little leeway. But when it's going against you, there's absolutely no question of clinging on to it for that extra second, hoping and praying that it will recover. You should be ruthless in cutting your loss positions. In fact, cut your losses. That's the mantra any trader can and should give you. So end of the day, all this works on probability. And say your strike rate is 60%. You will make money only if you follow the discipline. If you lose heavily in a couple of stocks and you gain marginally in a couple of stocks, it just makes no sense. Probability will work and you will make money consistently only if you stick to the plan. So personally, I work around a strike rate of 60 to 65%. Say 6 trades of mine on a given day, I will get a profit of 10K. And 4 trades, I lose 10K. So I'm left with 20K for the day. On another day, say I make 10K in 6 trades and the 4 trades which are going against me, if I hope to cling on for a second, praying for it to recover, and if I lose 20, 30, 40K, I will lose all I have gained over the previous day also. It is at this point that capital protection and risk management again comes into the fore. You have to be very sure, very thorough, and be prepared. I repeat, you have to be ruthless in cutting your losses. Coming to my personal risk management mechanisms, which are strongly built into my head, I trade about 4 to 6 lots and 10K per trade would be the target I'm looking for, while 5K would typically be my stop loss. Another very important thing is, once any of my position comes into profit, I will never sell that for a loss. The second it starts going against me, I make sure I square off. I make sure a profitable position is squared off at 0 and never at a loss. Because you're trading so many trades, you're taking so many trades per day, it makes sense just to let go of something which is not moving in your direction. There is no point, there is no need for you to wait for something to go up. Close it and take another position. Like I said earlier, with the advent of discount broking firms, about 2 ticks or 12 to 13 paisa is what you need to break even. And like I'm repeating myself, 3 ticks, 4 ticks you can easily get if you are quick and if you don't affect emotions to affect your actions. I would love to see millions of people enter stock markets. They're not doing so because there is no education about the stock markets. And there is no education about the stock markets because of lack of examples. Examples of successful traders is lacking because there is no education. So like you can see, it's a vicious cycle.